Welcome back, everyone. I'm absolutely thrilled you're here for another deep dive with The Explainer. Today, we're looking at a market that is sending out some very mixed signals. If you're in procurement or supply chain management, you really need to pay close attention. We're unpacking the global and Indian PVC market report for the fourth week of August 2026, brought to us by Polymer Bazaar. We've got a lot of fascinating data to cover, so let's just cut through the noise and get right to it.
Okay, let's dive into this. What is the right procurement move when international signals are telling you to wait, but local signals are basically telling you to panic? That is the central tension of this entire update. You know, if you zoom out, the global markets look, well, pretty sleepy right now. Things are stagnant. But the second you zoom into the local Indian market, the alarm bells start ringing. Shortages are looming. It's a classic tale of macro trends clashing with micro realities. So how on earth do you navigate this? To figure that out, we're going to break down the data step by step.
Section 1. Global PVC Market Trends. A fragmented market.
Right now, the global market is just incredibly fragmented. The US is definitely the outlier this week. Export demand there has actually strengthened, which pushed FAS Houston prices up by $20 to $700 per metric ton. But contrast that with Europe. Over there, demand is super slow and high feedstock costs are creating some serious concerns, which is keeping prices completely flat at 900 euros per metric ton. Meanwhile, the market in Turkey is downright dull. It's well supplied with both domestic and imported grades, leaving prices totally unchanged at $780. And in China, demand remains so low and sluggish that buyers are strictly purchasing on a need-to-have basis. This is actually prompting traders to actively offer spot discounts. So, aside from the US, the global picture is just incredibly slow.
Section 2. Indian Bazaar. Local shortages loom.
Now, shifting gears, because of that sluggish global demand, the latest overseas import offers for Case 67 for September were actually assessed slightly lower, landing right around $820 per metric ton CIF Nava Shiva. So you'd think, on paper, imports look cheaper, right? Well, here is the massive complication. Effective August 21st, the customs exchange rate for USD to INR was bumped up. For imports, it now stands at 96.50 rupees to the dollar. So even though the raw dollar price went down a bit, it actually costs more to bring it into India because your rupee just doesn't go quite as far at customs. It literally negates the discount you thought you were getting from the global slump. And this leads to some immediate local fallout. 1 rupee 50 paisa per kilo. The domestic heavyweight in India, RIL, selectively increased their PVC prices by exactly this amount, going into effect on August 22, 2026. So while the rest of the world outside the US is just treading water or even offering discounts, the local market dynamics in India are demanding a hike.
Section 3. Buying Pulse. Strategic Action.
This really maps out exactly why the market is so anxious right now. Let's look at the steps. First, converters are noting that despite what's happening in Turkey or China, there are real prevailing local shortages in India. The material simply isn't flowing freely. Second, they look at external macro factors and see rising crude oil prices, which acts as a massive support structure for their apprehension. They suspect more price hikes are right around the corner. Which leads us to step 3, action. Rather than waiting around to see if global slumps eventually pull Indian prices down, converters are playing it safe. They prefer procuring at the current prices. The fear of getting caught without material or having to pay a premium later is pretty much overriding everything else.
The absolute crucial takeaway here is the report's official directive. We recommend buying for the time being. Local producers are highly likely to consider raising their ex-works prices again. Why? Well, because those domestic shortages are very real and broader Asian prices are edging higher. The momentum is pointing straight up locally, even if Europe and China are moving sideways. Honestly, if you're sitting on the sidelines waiting for a major dip, the data strongly suggests you're going to be left paying a higher premium very soon.
Now, if you want to dig into the granular details of every single region or, check out the historical charts, I highly recommend grabbing the full PDF of this week for August report at polymerbazaar.com/futuretrend/PVC. Also, there's a really cool resource they offer. If you need instant updates on your phone while you're on the trading floor or sitting in a meeting, they have this AI-powered WhatsApp chatbot. You just shoot a message to +91 93746 and the bot replies in about 5 seconds. It's a fantastic tool for the focused learner who needs rapid, accurate data on the go.
And that brings us to the end of our analysis. We've seen that the global markets are a real mixed bag. Strength in the US, stagnation pretty much everywhere else. But locally in India, the combination of customs rate hikes, RAL's price bump, and undeniable physical shortages means the pressure is definitely on. So I'll leave you with this question. With global markets so mixed and local prices ticking upward, is your supply chain locked in before the next hike? Take a hard look at your inventory today. Thank you so much for joining me for this explainer. Keep analyzing, keep learning, and I'll see you next time as we continue to decode the markets.